You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarvati.
Welcome to another edition of the Big Cast. My name is Glen Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And for our third and final installment of content originating from the Government Affairs Conference in Washington, D.C., we're going to be speaking with Stephanie Lyon. She's a Senior Vice President of Regulatory and Risk Intelligence at Ncontracts, and we'll be talking about the regulatory and compliance landscape, which she had some great comments at one of the breakout panels that I really enjoyed at the America's Credit Union Conference out there. Before we get to that, let me just remind you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And this is our last call for CU Unplugged. If you're a credit union and you don't plan already to be in San Francisco next week, starting March 30th, I'm sorry, I'm going to need a note from your parents explaining what you had that was better to do than this. Starting on Monday evening, March 30th, and running through the morning of Thursday, April 2nd, we've kept the group intentionally small and almost entirely credit unions with a focus on thought leaders in the group. There's no exhibit hall, but we have carefully selected a small number of service providers not to sell, because again, no exhibit hall, but people that we think are best equipped to contribute to some of the key conversations that we expect to arise on topics like AI, etc. Again, this is an unconference, so there's no preset agenda. The whole idea is we're going to get together. The audience, the participants will decide what the most important topics are. I think we can safely assume AI is going to be in there someplace. Stablecoin's probably going to be in there, future of the branch, things like that. Realize we're getting tight on time at this point for the flights and things like that. But I really think this is going to be a good one, especially if you're within driving distance of San Francisco. I can't think of a better place for you to spend your week starting on March 30th. Again, we're looking for active participants, not spectators. Go out to cuunplug.com. You can find out more. Or what the heck, just drop me a note in LinkedIn if you get a chance. Happy to explain anything, and we'd love to see you there. This past week, I spent some quality time at Transact, the Electronic Transaction Association's annual conference, which took place in my backyard in Atlanta, Georgia. I have to admit, and I think I may have mentioned this last year, I was kind of skeptical. The ETA sold off their interest in this conference to a kind of a roll-up joint venture that's putting together kind of a conference business. And I really wasn't sure how that was going to work, how they would, given that this is their kind of their trademark, calling card for the stuff that they do. So I wasn't exactly sure how that collaboration was going to work. I got to say, for the first year, it went very well. They kind of positioned it as Transact powered by the ETA, and the content. Well, I've been to a few of these before, both in Atlanta and in Las Vegas, and frankly, I think this is probably the best one I've seen. They had some great stuff, and some of that could just be because of so much interesting stuff going on in the space. I also got to spend some time with Eric Hoffman. He's the Chief Partnerships Officer of Early Warning Services. He's been on the podcast before, and got to catch up with him from his role, really kind of leading the charge right now with Paze, P-A-Z-E, the digital wallet, which isn't, because it is not an app that sits on your phone, which I think for a little bit of time can be a little bit confusing to think about, but it's a neat model. I think of it as very Zelle-like, which happens to be a sister product of EWS. We spent some time about Paze. They're playing the long game in my mind, and it's kind of starting to come to fruition. They announced that Citi, which is the biggest bank that I believe is not part of the consortium that is the owner stakes, the folks with owner stakes in Early Warning, they are now live with their entire card portfolio of about 40 million, which puts the Paze overall portfolio of available card holders over 200 million. And on the other side of the network effect, they have now announced a deal with Domino's Pizza as well. And you've probably been seeing them all over the place. They've been doing a lot of publicity with TV commercials and whatnot. So I'm reminded of Zelle, which, the intro of Zelle came a lot later than the Venmos and PayPals of the world. And it took them some time to really kind of capture people's attention. And they're rolling along just fine right now. In fact, I'd say that they've got more momentum than PayPal or Venmo for that matter. Eric did mention that Zelle is now moving $1.2 trillion per year through their rails or through their system, which again is no longer an app. They did have an app for a while, resident, but now everything flows directly through the bank apps, which is exactly the model with Paze as well. That 1.2 trillion for Zelle happens to pretty much be on a par with the entire volume that's running through RTP, the real-time payments rails that were launched about 7-8 years ago from the clearinghouse. And given that those tend to be much higher value transactions on average, because it tends to be a bit more of a B2B solution, that's a pretty impressive number that kind of puts it in perspective. Somebody else I spoke to over the course of the week was Nicole Meisner, who chairs the Paytech practice for Taft Law, which is a very fast-growing firm in the space. She was, again, on the regulation front, she was hosting a lunch and learn along with some of her colleagues at Transact. And we got into the topic, inevitable these days, in Illinois, the IFPA, the Interchange Fee Prohibition Act. And we kind of got into the conversation about what's the likelihood at this point. There's still court cases, on appeal and whatnot, but at this point, it's still showing that the latest court cases say, yes, this law can go into effect on July 1, which in itself is a 1-year delay from the original plan, but coming up pretty darn fast and is very complicated. She made an interesting point. She said she had yet to find any prediction markets, the Kalshis and the Poly markets of the world. It would be really fun to see how they would predict how this is going to come out and if it's going to take effect. So far, nothing on that we can see. Maybe even too geeky for those models. I did my own search and tried to track something down. Came up empty, but I did find this. The IFPA, if you search on that, actually has another trade group with that name as opposed to a piece of legislation. The International Fresh Produce Association. I'm wondering which of those two get more hits on their website these days. Fresh fruit for rotting vegetables. If you know. If you want to look that one up, feel free. Another gentleman that I got a chance to speak to last week, Cameron Brady, the CEO of Global Payments, who, in my view, has a very unique perspective, given that they are currently or have recently become the largest acquirer in terms of the payment processors working on the merchant side. And they are a pure play, as he pointed out, the way they've reconfigured their portfolio recently with some interesting both divestitures and acquisitions. They are now a pure play merchant services proposition in terms of what they do for the world. So they are well aligned with the merchant position. So I had the opportunity to ask him what he thought of the Interchange Fee Prohibition Act. He seems to agree with most people who are close enough to know how this stuff works and really calls it an unworkable solution. He also points out very clearly that he clearly understands the merchant's position. And if he was in their shoes, he'd be thinking the exact same thing and they'd take the same approach as they are. But at the end of the day, there are far easier ways to take care of this. Like, for example, if the whole issue around taxes and not charging interchange on tax because there's no profit, so you're actually incurring a cost as a merchant to collect on behalf of the government, then the government ought to reimburse you for playing tax collector for them. That was one of the points that he made. It could be done a lot more simply if we do it that way. Ironically, if you step back, that's exactly the way Illinois used to do it. And they took that money out of the budget, which is when the retailers got upset and they came up with the solution instead. So trying to come up with some new solution isn't always necessarily better than the old solution. This all ties very clearly to regulations, compliance, and that's the theme of this week's interview. So let's have a listen to my recent conversation with Stephanie Lyon. I thought that this year's breakout sessions at the GAC were particularly good, and one of my favorites was the regulatory compliance and litigation insights session. And the person who I think I wrote down quotes from more than anything else during that session was Stephanie Lyon of Ncontracts. And so I really appreciated, Stephanie, that you took some time to talk to us a little bit more about that. I'd like to kind of dig into some of the details.
I was so excited. This is like my favorite topic to talk through. So I was thrilled that you wanted to continue the conversation.
I remember you said that on the stage, it's like, oh yeah, maybe people can tell I get really excited about this. And you know what? Yeah, the audience did too. At least, if you've signed up to walk into that room, I think we can assume you're interested in the topic. Why don't we start by I think you mentioned Ncontracts has been around for some time now, about 16 years, but if you could just say a little bit about the firm that you work at and also your background that I think really ties in nicely to, why you're a perfect fit here.
Sure. So Ncontracts serves around 5,000 financial institutions across the United States. We serve credit unions, banks, mortgage companies. And really, what we do is we bring technology to the operational risk and regulatory compliance side of things. Our number one goal is to make sure that the practitioners out there, the second line folks, risk and compliance people, have the right tools to be able to have the right compliance and risk management programs and ultimately protect, defend, and find business opportunities for their financial institutions. I have been leading the regulatory and risk intelligence side of things at Ncontracts for now just under 8 years, or it's going to be, which time flies here.
Mm-hmm.
And I came, like you said, from the credit union world. So I started out as a practitioner when I was in law school. I was already working in financial institutions and risk and compliance departments. And then I ended up leaving to go join the National Association of Federally Insured Credit Unions, which is now America's Credit Union, as a senior compliance counsel, helping everyone from the $1 million in asset size credit union to the largest credit union in the world. So I saw a lot of the different complexities, programs, what works, what doesn't work. And it really helps me understand that just reading a regulation is not enough. You have to be a true entrepreneur and take ownership of the gray areas to find the opportunities and to do compliance and risk management well. And that's what I bring to Ncontracts now.
And I think you mentioned one of your past lives. You were actually at a credit union yourself, correct?
Absolutely. I have actually led my own risk and compliance teams in the past. And, when you're at a smaller institution, you wear every hat. So not
Mm-hmm.
only did I do risk and compliance, I help with debt collection, I help with field of membership issues, I help with even marketing, which was a wild stint for a while. But yes, I have done a lot and have seen a lot in the operational side of the house.
And I think you just mentioned before we started that your husband's in the credit union space too. So this is
Yeah.
genetic at this point.
We seem to have we owe a lot to the credit union industry. We met through credit unions, we worked together, and now he is a CEO president. And funny enough, the story of our credit union life starts way before us. His mom was also a comptroller at a credit union in New York. So we definitely bleed through and through the financial services space.
I love how that happens. But one of the things you mentioned that I was really taken, and I think it speaks to a lot of what's been going on these days as the regulatory kind of issues shift to the states. And I think the quote I wrote down was regulatory risk hasn't disappeared, it's simply shifted. So can you talk a bit about how the states have kind of changed the game as far as how they're filling in those gaps?
Yeah, I think that anytime we go through a period of deregulation, especially when we've had such a strong federal government enforcing and writing rules, there is a question of, do we have less responsibilities, or are the people enforcing these responsibilities simply moving to a different area? And that is exactly what is happening today. We have noticed that most of the states have picked up and started writing consumer protection rules. And they are very vastly interested in artificial intelligence and privacy and consumer protection. So the quote that you say is exactly what I think is happening today, which is the fragmentation of regulatory expectations. So credit union professionals who are thinking, wow, the CFPB isn't out there as a boogeyman out to get me as much as it was maybe in the last 3-4 years. They have to realize, are you paying attention to state attorney generals in your areas of operation? Are you paying attention to plaintiff attorneys? Are you paying attention to the number of new laws and bills that are popping up when it comes to disparate impact, which is something that the federal government is saying they don't want to enforce anymore? Now states are codifying those laws from New York to New Jersey and other states that already had those laws in their book. They are taking those laws out and saying we are going to still have penalties associated with disparate impact. Like Massachusetts, where I live now, we just had a major enforcement of $2.5 million on a disparate impact theory. So it's important for people to realize that it's not gone away. It is now being enforced by different players that have the boogeyman, by the way, on their side, having hired Rohit Chopra to be a part of
That's
the
right.
Democratic Attorney General's Association. So
Well,
that's
that's and it's when you say different players, in some ways the same players. I think you mentioned that a lot of the folks who got let go at the federal level are now joining the states.
absolutely right. We saw a huge call to action by the state banking departments and attorney general saying, hey, You don't have a job, you were let go from the federal government. We want you, come here and give us your expertise and all your playbooks.
I remember I was at another conference. I can't recall which one it was last year, but into the new administration. And I thought somebody put it really well. They said, when someone gives you a box of scorpions, consider it a gift because they're contained. And what we've done now is we've kind of toppled over the box of scorpions, so they're scattering to the states. Basically, is kind of what's happening. So,
Oh my goodness, that is an amazing analogy, and that's exactly what's happening.
that was one of those that I wrote down from another one. You touched on a couple more things I want to make sure that we kind of dive into. First off, you mentioned the CFPB. You also made a comment that you actually found value in the CFPB database. Can you say a bit about that?
Yeah, so the CFPB has had this public consumer compliance and complaint database that is accessible to anyone, and it has an incredible amount of intelligence in it. It is one of the most real-time data as to where we see consumer harm or confusion. And I always use it as a place where I get my market intelligence to see, is there a product or an institution type that is generating a lot of issues? What is the newest theory on people feeling like they're being deceived or things are unclear, because those are exactly the targets for unfair and deceptive and abusive act and practices. And usually those are very difficult areas to just test for. Like your compliance and risk and audit teams can't just identify them by doing just regular testing. They have to understand everyone doesn't read a disclosure the same way. Everyone doesn't see a fee the same way, but knowing which disclosure, which fee, what part of the process is causing confusion, you have to pay a lot of money in terms of the penalty before you figure that out. But utilizing the consumer complaint database gives you those information points. If you know how to use it, if you know how to filter out by product, service, topic, theme. So I highly encourage everyone to go utilize it while it's still standing, because there is a thought that maybe eventually with the defunding of the CFPB, that they won't be able to always have it publicly available. But it is a great tool for the industry if you're using it out there.
It feels like something that AI can really be kind of set to task on too, that, because it's a large set of data that they can help summarize.
That's 100%. It's structured data, so it's even easier for the AI to go through it and figure out some trends and to give you some tips. So I think that's a great use case for artificial intelligence and using data that's publicly available that you don't have to curate.
And speaking of AI, you mentioned this earlier, and then on stage you mentioned too. I was not aware of this, that there's been laws passed. I think the two examples you gave were Texas and Colorado, and here's the issue with the states taking charge of it. From what you said, I think those two laws are quite different. So I'm kind of curious, what's the current state of AI? Clearly moving to the states, but what are you seeing there?
Yeah, so something interesting, a data point I saw is that all 50 states are either passing, have passed, or are looking to pass an AI law. And they are all very different because states have different appetite for how much they want to regulate businesses. So Texas, the Responsible AI Governance Act that went into effect in January 2026 already, is really focused on the frontier models, those big, large language model providers like ChatGPT, Claude, et cetera. So it's not going to be as impactful for financial institutions or credit unions because we're mostly adopting AI that is already readily available. And this is where Colorado is very different, because the Colorado law that will come into effect this summer in June is actually targeting deep people who deploy the technology as well as the developers of the technology. And who is deploying it? It is credit unions. If you are utilizing a vendor to, let's say, have automated decision making in your loan program, you're using AI for risk rating, for deciding when to open accounts or not to open accounts, those are the kinds of decisions that are covered by this Colorado law. And if you're not ready and you're not monitoring the states, by the way, Glenn, between my presentation at GAC and today, New York already has a new AI law on the books. They're just waiting. Passed. Yes, it is now just waiting for the governor to sign. And this law is all about disclosures of every time you use AI. And that's what I'm talking about, is you don't get to just say, oh, the federal government is going to preempt these AI laws. There was an executive order. We don't have to worry about it, because the reality is they are not yet preempted. And the executive order, which I like to say executive wishes, because someone has to go implement these wishes, that they don't just become the law overnight, is not going to protect institutions who are waiting for this to be centralized. So we're going through a very difficult patchwork of state AI and privacy laws that are going to play out very differently, and not just where you're chartered. And I think that's the key thing here. I think any credit union who thinks, oh, I just operate in Florida, I'm just in Texas, I don't have to worry about these other laws. The reality is, if your members move and your members are trying to get a loan in Colorado and you're using automated decisioning, you better be ready to comply with that law.
I was going to bring that up because that comes to my mind. And the other one that, and even more of a wide net is the Illinois interchange law, where if the merchant's there, if the member's there, if that member is traveling, if they're using, e-commerce, it gets very dicey of, just exactly what is the scope. Now, the Illinois law was deferred by a year. Again, that's supposed to be, and this is for interchange we're talking about. We've covered that quite a bit here on the big cast, but that is now again slated to take effect in July. You mentioned Colorado's taking effect at mid-year. Is that under any legal kind of court, question, or is it pretty much straightforward? It's going into place.
It's already been delayed. So funny enough, Colorado has been delaying their laws because they were very aggressive and they realized they need to give the industry some time to comply. But
not because of a court case, but because they said, okay, which is basically kind of to some extent what happened and what me personally, I still think is going to happen again in Illinois, because I just do not see how you could possibly change the entire payment mechanisms, especially at smaller merchants, between now and what is that? We got another 120 days before it has to happen.
Right. And I think you just picked up something else. Is it's not just the laws, it's the litigation that is now, like the scorpion analogy, right? That is also something that is going to get institutions, because every state can come up with a different decision or a different way of seeing the world. Maybe that interchange law will be constitutional or properly written in Illinois, and then someone else in a different court will find it to be not so.
Yep.
And so we're about to enter this world where things look very differently depending on where you are operating, and also depending on when your members live, want to get loans, want to open accounts. So this is just, I think, one of the most complicated environments we have and are going to have to live through and figure out how to manage.
Another area, you talked about this on stage, reputation risk, which is another thing at the federal level they're kind of taking off the table in terms of criteria for examinations and whatnot. You had, I thought, some interesting points there too. That I'm not sure how that falls into the state thing, but reputation risk can still be an approach if you've documented it properly. Is that the way I heard it?
Yeah, so reputation risk, the reason it's being taken off the table by the executive branch and the federal government is because they think, or have a theory, that it's being used improperly to just say, we don't want to serve a whole category of industry or people or their political or religious views. So it's basically being used as a tool, as a catch-all to discriminate against a specific group. That's the theory.
The catchphrase of debanking. It was
exactly that phrase, right? And so what they're trying to do now is to say, hey, reputation risk is still real if it has a financial impact. So if you can demonstrate that you are utilizing reputation risk in a proper mechanism to say, if we bank these folks right here, we may lose access to our funding mechanisms. We may have a run up of deposits, and we can actually quantify what that looks like. Then you're not using it as this catch-all, huge amount of discretion policy that it was being used for in the past. So people are not being told you can no longer do risk rating, you can no longer do reputation risk as a category in your risk assessments. They're being told, if you do, and you're going to be a practitioner doing it, make sure that you have quantified it and you have some financial real world impact to your institution that this tool is helping you acknowledge. Otherwise, don't use it. So it becomes like, if you don't want to formally use it properly, then it's a discretionary tool. And I think, Glenn, the best way to think about it is, if you say you have underwriting policies and you have some level of discretion, discretion is what gives people all the problems we're talking about when it comes to loans. Mm-hmm. But not if you document the discretion, not if you govern the discretion. And it's the same thing with reputation risk. If you know how to govern it, if you know how to quantify it, you can use it. So use it responsibly. And if you're not ready for that, don't use it at all.
A good point, and another one that I think we're going to have to see how that plays out, because that to me feels like a real hot button in either direction. I can't win either way, I would think, but it'll be fun to watch. The core takeaway that I think I'm hearing here, as well as from the panel, is yes, the regulatory environment has relaxed at the federal level, but it's kind of a keep on keeping on message because you're probably better served still assuming that things are the same way they were in summer of 2020, or 24 rather, right?
If I had to give advice to an executive leader, because I've traveled the country now, that's what I do. I go around, I listen to regulators, I talk to them, I hear second line folks. It is very clear to me that risk and compliance departments know that keeping on is the right thing to do in this environment. The pendulum swings and it swings violently, right? So they know that they have lived through it for the past three administrations. All we have seen is change, then change back, then go back to not having to worry about it, then go back to now we're going to really penalize you for not worrying about it, right? But the executive level, the folks who have the purse strings and decide where the investments go when it comes to how much to protect their institutions, I just want to give the message that we want you to innovate. We want you to be able to take appropriate risks, but you can't do all the innovation and just doing novel new things like stablecoin and 1033 and all these great things that quote are very sexy, right? You have to also bring up your second line and your ability to govern AI, your ability to govern new technology, your ability to also compete with the largest financial institutions out there is given to you if you have the strength and the ability to govern what you go into. It is those smaller institutions, mid-sized institutions that choose to not worry about compliance or risk management, and they choose to enter very risky areas, whether it's payments or it is cross-border transactions that end up being on the news page as a failed institution or an institution with a massive enforcement. So don't be that institution that gets caught flat-footed because you think this environment is all about experimentation and innovation with no guardrails. Know that the guardrails will come and they will be painful if you haven't been paying attention to it.
I think that's great advice. And yeah, we're coming up on another checkpoint very soon here in November. So we'll see exactly how that may kind of create a new twist right there. If there's other people, Stephanie, who have been listening, who want to, who are as excited about this stuff as we are, want to talk to you, or if they're not, but they know the people in their organization, may benefit from Ncontracts. I had no idea you had 5,000 institutions. That's remarkable. What's the best way to, follow through?
Definitely go to ncontracts.com. I think we have a tremendous amount of information out there from blogs. I put out a regulatory update every month with all of the new changes to the laws and regulations that you can subscribe to. We have an enforcement tracker to tell you what are the biggest enforcements. And we do webinars that really cover the gamut of risk, regulation, AI, third-party risk management, governing that AI, cybersecurity, and so forth. So check us out. And then if you want to follow more real time, I'm very active on LinkedIn. Find me as Stephanie Lyon, and you will see that I don't just love to talk about it. I love to post about what I'm seeing and my thoughts and what I'm learning as I travel the industry and hear regulators, examiners, and fellow compliance and risk professionals.
That's the best part. Somebody who likes to continue to learn on this one. I'll post the link both to the blog and to your LinkedIn. And I'm sure that we'll be back in touch to talk about more of these because the stuff is not going to slow down. It's pretty clear. Stephanie Lyon from Ncontracts. Thanks so much for taking the time.
Thank you so much.
So I had no idea Ncontracts was that big, working with thousands of FIs. They're clearly a familiar presence in the scene. I see them all the time on the trade show floor and whatnot. But with an evangelist like Stephanie in their corner, it's easy to see why and how they've built up so much traction in the space. I'm clearly got to pay more attention to them because I'm definitely going to keep in touch with Stephanie because she has her finger on the pulse of what's going on in the space too. We're going to be taking a break from the Big Cast next week as we are going to be heads down at CU Unplugged. Again, one last time, if you are a credit union, give me a buzz. Go to cu.unplug.com, cu-unplug.com. We'd love to see you out there. It'll be a great conversation. Happy to answer any questions around that one. You can also check out the Best Innovation Group website, and you'll find out more there as well. We will be back on April 7th with more, most likely, I'm guessing, with content from CU Unplugged is what we'll be talking about at that point. Until then, there's always all kinds of past episodes you can track down, including all three of the episodes that we did relative to the Government Affairs Conference at this point. Some of our other recent ones, talking to companies at Finovate, both Finovate UK, just a month or so ago. Boy, it feels like longer, but I guess it was only about a month. And going back further, Finovate in New York City back in September. Talked to some really cool companies. Venture Tech, for that matter. They're all coming. They're coming fast and furious. We'll be back on the road soon after that as well. Again, big-fintech.com. Media tab, you'll find all that stuff. We'd love a follow if you haven't already. We'd love if you subscribe or whatever your podcast app requests that you do. And that way you'll be alerted every time we've got new content out there. You can find our grand poobah, John Best, at jb@big-cu.com. Find him on LinkedIn. You'll find me at LinkedIn also, Glen Sarvati, at my firm 154 Advisors. As I say, we'll be back with more before you know it. And as always, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.